This new TradingView indicator gives exact buy and sell signals based on momentum. And if you combine it with this indicator, you can get some real good signals. So let's skip all the nonsense and without further ado, let's jump right into it. So first and foremost, I want to say Happy New Year to everyone. I'm sure we will have a great 2024. We have a lot to learn together. So now let's just start here by opening up the indicator right away. So first you want to open a clean chart in TradingView. I'm currently looking at the British pound US dollar on a 5-minute time frame. Now we want to navigate up here to the indicators tab in TradingView. And what you want to search for here is Trendoscope. Just like this. You can see here that Trendoscope have created many indicators and many of them have received an editor's pick award, which is of course a good sign. But in this video, you want to navigate down here to the indicator that says RSI divergence goggles, and you want to open up this indicator. And what you will notice is that when you first open up the indicator, nothing at all will happen. And that is because you need to actually press on the chart here. You basically press on 2 points to choose the range where you want the indicator to appear. This is actually a very nice feature because it can help keep your chart very clean. Now guys, to improve the indicator, we need to change a few settings. So what we do here is that we navigate up here to the settings tab for the indicator. And the first setting is basically the time frame we chose, so you can keep this one as it is. But the next setting we need to take a look at is the RSI setting. And you can see here that we have an RSI length. The standard length here is 14. And here it depends a bit on what time frame you're using and what kind of markets you're using. If you are a day trader, so if you're trading on the 15, maybe 5-minute or even 1-minute time frame, you can actually change this setting to 9. Some traders even go, with a shorter length to, for example, 7, and so on and so on. And by decreasing the RSI length, we can actually get more and faster signals. But at the same time, if we decrease the RSI with too much, we can get many false signals. So if you are day trading, remember we are currently on the 5-minute time frame. I think that 9 is a sweet spot. However, if you are, on the, for example, 1 hour or 4-hour time frame, you can definitely just stick with the 14 setting here for the RSI. But since we are on the 5-minute time frame, and because we are on the British pound market, I'm gonna keep this one at 9 right here. The next setting is also important. This is the trend setting. And as you can see, the standard setting is a simple moving average of 200. And you may, even wonder, what does this setting do? Well, basically, this indicator will produce some signals when we are in an uptrend and some signals when we are in a downtrend. And that is why we need to use this trend setting. However, the standard setting of 200, that is a very sort of long-term moving average. So if you're trading in the short term, many traders prefer to first of all use an EMA, that is an exponential moving average, meaning that the moving average will react faster to recent price changes, which can many times be a good thing. And I'm actually also going to decrease the length from 200 to 15. So now we're talking about sort of more short-term trends. We get faster reactions on the moving average, and this is suitable for this current market. But once again here, when it comes to RSI settings, it can depend on the market. So please guys, keep that in mind. For the next setting, I actually want to move this one a bit to the right here, because you can see that we have something called zigzag. And the signals we get on the indicator will depend on the zigzags, both on the price and on the indicator. So you can see that if you click this display zigzag right here, you can actually see the zigzags both on the indicator and the price. This is basically where the signals, what the signals are based on. But in my opinion, if you use this setting, the chart gets a little bit messy here. So in my opinion, I think we should not display the zigzag, and you can also click here, show pivot point labels. So make sure to choose these settings and press OK. Now guys, we're ready to open up our second indicator. So we go up here once again to the indicators tab, and now we want to search for, you want to press the star right here, and you want to search for all candlestick patterns, just like this, and also press a star. I know, guys, that I have heard in the comment section that some of you guys sometimes have a hard time finding this indicator. So what you can do, if you don't find the indicator when searching for this, you can search for this, but in your own language. For some people that has helped, just letting you know. But the indicator in English is called all candlestick patterns, and it is this top indicator right here. So make sure to press this one. Now we need to change a few settings. So we go up here to the settings tab for the indicator, and as you can see, this indicator has many different kinds of signals. We need to change a few of these, and you can also see that this indicator also has a moving average because some signals only appears in downtrends and some signals only appears in uptrends. Unfortunately, we cannot use the EMA 50. Remember, we used the EMA 50 for the previous indicator, but since it at least has an SMA 50, I think this is the best setting. So make sure to have the SMA 50 as the top setting. As for the pattern types, you want to disable these ones. You want to keep the engulfing pattern. We keep the hammer pattern as well, which is a very common and strong reversal pattern. You also want to make sure to check the shooting star, and now we are finally done here with the settings. So how does the indicator work? Well, as you can see, right here it says D, and right here it says D. This basically stands for divergence, and it means that we have a divergence between the price and the momentum. So the indicator measures momentum, and then we also have the price. So in this case, you can see that we have one low and then a lower low on the price, while we have one low and then a higher low on the momentum. This is what we call a bullish divergence and indicates a reversal to the upside. However, these signals are pretty common, and alone they are not that strong. So what I always recommend when you're trading divergences is that you always want to combine the divergence signals with other confluences. And with other confluences, I talk about things such as, price action, such as candlestick patterns, or, support and resistance. And in this particular case, you can see this signal right here, we have many things happening at the same time. First of all, I want you guys to notice that we had a nice little hammer right here. We had a clear low coming in right here. We had a low. We can actually draw a sort of support area. You can see the price came up right there. Then the price came down towards the support area once again. And it was at the support area we saw the divergence signal happening. But what you also can see with this bullish signal is that on the support area, we had first a hammer pattern. You can see we had a hammer pattern, and we get this signal automatically from our candlestick pattern indicator. And the next candle, which was actually a bullish engulfing pattern. So here we have three things happening. We have two bullish signals coming from the candlestick indicator. We have the signals coming in at a support area, and we also have the bullish divergence signal. So right here, we have three bullish signals happening at the same time. So that is a very, nice buy signal right there. But alright guys, so if you guys want to dive deeper into candlestick patterns and get a real good understanding, I actually have a massive 1.5 candlestick pattern course here on YouTube. So if you have some time over, I highly recommend all of you to watch that video next.